And good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where we put you in front of where the action is in the broader markets. And from there, we always like to drill down to take a look at individual stocks that can benefit from potential pockets of strength. And of course, we've seen quite a bit in the way of action, certainly over the last two holiday shortened weeks. It's been quite volatile, but I will tell you last Friday's action in the markets was what I would say a game changer, and certainly over the near term. And so let's go ahead and dig in. Take a look at what we're going to be covering today. First item we will go ahead and do is take a review of the current markets, get a feel for where we are currently so that you can formulate a game plan, not only for today, but certainly for this week, and even more importantly, going forward longer term. From there, we're going to go ahead and take a look at some intraday charts. Given the current volatility in the broader markets, you are better served in this environment to become more familiar, if you're not already, with the utilization of these intraday charts, simply because not only are the broader markets, but a lot of individual stocks are really shifting on the dime. And realistically, a lot of that is headline news driven, but you will want to be familiar with how to utilize intraday charts simply because of how quickly shifts in the broader markets are taking place. And then from there, we'll go ahead and take a look at some positive stocks within defensive groups. While last Friday's move in the broader markets was constructive and viewed as quite positive, you are still going to want to have a generally defensive stance in this broader markets. This will make more sense as we move forward. And then from there, focusing on leaders prior to the sharp sell-off. And what I'm talking about here are stocks that were relatively outperforming the broader markets prior to this sharp correction. And the reasoning here is a lot of those stocks that were outperforming and were viewed as leadership names, they were leaders for very sound reasons. And primarily it was because they had very sound, strong fundamentals supporting them. And while they sold off with the broader markets, those fundamentals still are firmly in place. So you will want to pay attention to the action in those former leadership stocks. And then from there, we're going to, if we have time, take a look. There's been quite a bit of strength in Brazil. January 4th, they ushered in a new president, and it's been met with quite a bit of excitement with an eye toward an improvement in their economy. So let's go ahead and get started. Initially, we talked about taking a look at the broader market. So what we're looking at here is a daily price chart of the S&P 500. So each bar represents 1 day of trading activity. And from there, I've overlaid some very simple technical indicators. On the top here, we have what's called the RSI. It's a momentum indicator, relative strength indicator. But over top the price action are some simple moving averages. So this 10-day simple moving average is your green line. The red is a 50-day simple moving average. The blue is a 200-day simple moving average. The relevance here is these are smoothed out versions of the prior. In the green line, the prior 10 days, red is the prior 50 days, and you're using these simple moving averages not only to help determine the health or weakness of the broader markets, but also as support or resistance. So I'm taking you back here to the sharp October correction in the broader markets, the attempted rally from there, and this very sharp double correction here in December. So what we're paying attention to here is the break down below these simple moving averages. And that is very clear-cut sign of weakness. What happens when the broader indices break below these simple moving averages, they now act as resistance to any upside rally attempts. And that's as to opposed to prior bullish periods. We can go back certainly to the summer months here, July and August, when the S&P 500 was very much in an uptrend, and it was using these simple moving averages primarily as upward support. Now these moving averages are trending downward. The price is below these simple moving averages, and we can see that rally attempts have more recently been met with resistance at these downward trending simple moving averages. Creates a very, very heavy pattern due to the price. Certainly from peak to trough, we are currently in what's called a bear market. But we did have action on Friday where the broader markets rallied quite significantly, 3.5% on the S&P 500. It did so on volume, and that gave us a signal that from my work with MEM Investment Research, we were on the prowl for what's called a follow-through day, and that is a day where the broader markets are up over the prior day, at least 1.2% on increased volume, and it is occurring out from this low. So it was the 7th day from this low. And by definition, this is telling you that this downtrend in the broader markets has been reversed. We're now in a confirmed uptrend, quite bullish. We can also take a look at the other outlying indicators to potentially confirm that the RSI is trending upward. Ideally, we want it to cross above this net neutral dash line to confirm this uptrend. And then also the stochastics. This is another momentum indicator. And ideally, you want these stochastics to also cross above this dashed net neutral line to confirm this uptrend. Now, to be certainly clear, this is an uptrend within a bear market. So in other words, it is what I like to call a playable rally, and it can certainly extend at the very least up to this 50-day simple moving average, this red line. This is going to be your very first area of possible resistance for this rally. As we continue to advance, more conviction will come with this rally. We like to also see the high quality growth stocks breaking out to new highs. We're not quite there yet, but at the very least, we are in the beginning stages of a confirmed uptrend. So let's take that information and take it a bit further, because as I mentioned, overall, the trend in the broader markets is down. So you will want to certainly have a little bit of a defensive feel to your purchasing, certainly when combining it with higher growth stocks. Before we get into that, let's go ahead and take a broader, bigger picture view of where the broader markets are. So as many of you know who have watched MEM Edge show before, we are now looking at what's called candle glance. This is accessible from that initial interface page on StockCharts.com. And what you can do is go ahead and populate down in this bottom box here various indices, indexes, ETFs that you'd like to take a look at the performance. It's going to provide you with a 2-month snapshot, and you can then run a comparative screen through that. So what I've done here is a lot of the broader indexes, the S&P 500, the Russell 2000, and then a lot of the ETF sector funds. So we have the energy fund, utilities, financials, technology, consumer cyclicals, and then gold. That's been acting quite well, combined with biotech stocks, another outperformer here recently. But we do want to keep an eye on that VIX. That's the volatility index, better known as the fear index. So what I've done is populated these 12 candle glance charts with those different groups that I talked about. We're looking at the last 2 months. I've gone ahead and overlaid what's called an RSI. That's that relative strength indicator that we talked about, that momentum indicator. From there, you can go ahead and sort by descending. So what it will do from here is take that list that you've populated down at the bottom and sort these charts by relative strength. So we can see that from left top is going to be your strongest and then so on down to your weaker areas. And gold is very clearly up here in the forefront. And we're going to cover gold, how you can capitalize on this move, even though it does appear to have advanced quite a bit already. By most accounts, there is still more upside available within that space. Take a look at biotech stocks, and this is very, very compelling. There was a very big merger last week. Bristol Myers purchased, put a bid out for Celgene, very big biotech firm. Celgene popped 35% on the news. But even prior to that takeover announcement, we did see biotech stocks picking up quite a bit, which is very, very interesting given the inherent risk and volatility in these stocks. We are definitely seeing a move, and we'll go drill down into how you can capitalize on that as well. And then we can see consumer discretionary stocks have picked up. And this is a group that prior to this reversal here that we've seen over the last 2 weeks, the overall group was down over 22%. They really did get hit quite hard, but they are seemingly bouncing from their energy. We've seen energy stocks also attempting, it's a bit more feeble, but the price of oil actually dropped 33% over the last 3 months. And in response, energy stocks took a dive. They are now starting to reverse from here. The NASDAQ, this is going to be all about the biotechs, but also technology. We're seeing a nice uptick here in technology. But notice how tech is down here in this lower quartile as far as relative strength. And a lot of that has to do with the recent weakness in Apple. For those of you that follow the markets closely, you may have noticed last week that their CEO, Tim Cook, came out, and in a very rare move, he highlighted the fact that their Q1 revenues are going to be well below estimates, and the markets dropped Apple dropped 5% for the week on the news, and it's a very heavy component. 16% of XLK is comprised of Apple, so it's really holding technology sector back, even though there is strength outside of that stock. Now we can take a look at the VIX, and I talked about the need to be on top of volatility. So currently the VIX, the volatility index, is trading at 2175. So anywhere in that 18 to 22 is going to be the beginnings of raising that proverbial red flag. So we are still in that red zone. We can see that the VIX did get up well above that 35 level about a week and a half ago. We've subsided since then, certainly since Friday's follow-through day, but it is still in that cautionary area. So now we've taken a look. Now moving further on, we can see utilities, consumer staples, they're still doing well, even though the markets, the green light has come on. We're seeing growth stocks come to life a bit. There is still traction in some of these more defensive consumer staple and utility stock areas. So so now we have a good stand and a good feel for where the broader markets are. What I'd like to do from here is, as we talked about, go ahead and take a look at some areas within the broader markets that are going to be a bit more defensive, but also have a growth component. So this is going to be one way for you to more safely, for lack of a better word, play this move that we are currently seeing, the uptrend in the broader markets. So what we are looking at here, I'm going to exit here very briefly and show you the fastest way for you to go ahead and access strength within some of these more defensive areas. What we can do is go ahead from this interface page on StockCharts, go ahead to the sector summary, and from here we can see that this is going to provide you with the one-day percent change on these various sectors. But what I want to do is drill down into some of these, what are viewed more defensive. So certainly consumer staples. And we can see within consumer staples, there are quite a number in the way of choices. But I'm going to go ahead and drill down into the food retailer and wholesaler. Now, this is viewed as defensive because regardless of the economy, there is still going to be a need to feed, certainly buy food. And so what we can do from here is go ahead and take a look at the underlying stocks within consumer staples and the food and beverage area. And really, quite simply, one of the easier ways is to use this Scooter SCTR ranking. This is going to sort this list by strength and primarily technically driven. But this is where you want to fish, so to speak. This is where you're going to want to pay attention. Up in this upper quartile, these are stocks that have held up well in the broader markets and are continuing to be strong. So this first name that I will go ahead and take us to is Casey's General Stores. CASY is the ticker symbol. And this particular stock has a bit of a yield, 0.9%. So you're not really purchasing it for the dividend. Rather, let's take a look at this action here in late December in this particular stock. And this is all about earnings. This is a 2-day, very sharp advance in the stock. December 10th, they did come out with the earnings, 41% earnings growth over this same quarter a year ago. And I will tell you that analysts are revising estimates upward for 2019 for this year. So they're looking for 36% in earnings growth. So that should be a continued driver. Now let's take a look at the technical aspects of CASY. And we can see that the stock subsequent to this sharp advance, it fell back in line with the broader markets. But here we can see more recently, the stock has broken back above. I have those same simple moving averages that I like to use on the daily charts. The green is your 10-day. Red is your 50-day, and we can see that the stock has very nicely broken back above these simple shorter-term moving averages, which is constructive. We can see that the RSI is trending positively. We want to be up above this net dash neutral line. The stochastics, down below we have what's called the MACD. That's a moving average. Convergence, divergence, equally effective. We want to see this MACD black line cross up through the red and also cross up above this net neutral zero. So at this juncture, it's not particularly lively looking. Ideally, this type of upward thrusting move is what we would want to see. So it's a little bit sleepier here. But again, a bit more defensive, a name that you could certainly take under consideration. Let's go ahead back and take a look at that listing again by Scooter. And we can go ahead and resort it. Take a look at another stock. This is Weiss Market. WMK is a ticker symbol. A little bit smaller in market cap, but we can see, again, a very similar dynamic. But this stock, unlike Casey, did not really get hit with the broader markets. It's held in remarkably well. So that's really number one, constructive, because we like to see stocks break out of what are called bases. This is a saucer-like base that has formed, and we can see that this RSI is trending positively above that net neutral. The MACD did have that black line up through the red, that positive crossover. And today the stock is gapping up a bit. It's up almost 1%. I'll reveal some of the background with this stock. Weiss Market is a bit of a turnaround story. And we can see that the stock is having a nice move here. They reported earnings back here in the beginning of November. November 2nd, the company came out with earnings 231% above that same quarter a year ago. This one has a healthier yield, 2.6% on the yield. So you have a nice dividend, and you can see that the stock is behaving in a rather orderly fashion. We have time to take one look at one more stock because we have a lot more that I do want to go ahead and cover. What we can go ahead and do is take a look at another stock within this particular space. And I had a couple of names highlighted. but we can easily dig in. And one other action that you can do here is go ahead and hover over the ticker symbol, and it will provide you with the thumbnail snapshot of that particular stock, which you can then go ahead and get a feel for whether it's a down and out stock that's turning, or is it a stock that is further along in its advance. But let's go ahead. I'm thinking that this stock might be in a different area, but it is equally defensive. In fact, it is. This is a food products company. This is Treehouse. THS is the ticker symbol. Now, I will tell you, it's not the prettiest of charts. We can see inherent volatility here within this particular stock, but there were a couple of dynamics that made it a bit attractive, and that is the fact this is another stock that is very much a turnaround stock. They are getting back on their feet, so to speak, but the estimates for this year are calling for very, very big advance. 2018, the company's earnings were down 24% year over year, but they're looking for this year's earnings to be up 20%. So nice big earnings grower. We can see the RSI trending upward, that MACD positive black line up through the red, crossing over as the stock advances up to that prior high in price. The stock's up about 1.7% on the day. So that's a look at one defensive area. I do want to go ahead and drill down. We talked about the strength in gold stocks, and there's a very sound reason. Actually, there are two prominent reasons why we are seeing a move into these gold stocks. And I'm taking you to this initial interface page to again show you how you can access stocks within the gold space. So here we have those sectors listed here, again, by percent change today. We're going to go ahead into the materials sector, and from there into the gold miners. They don't appear to be quite that vibrant today, but they've had quite a significant advance. So that would certainly make sense that they could pull back a bit. We do have some stocks that are up, but gold stocks by and large have been and can be viewed as a defensive play in the broader markets. But there is another dynamic at play here, and I've talked about this over the last couple of weeks, and it is still in play. And that's the fact that since 2013, there's been more than an 80% chance of a positive return in gold prices in January. And the reason for that is because the demand that emanates from Asia. They do give gold as gifts. That's very customary during their Chinese New Year. So over the last 2 years, we've seen returns up to 40% in some of these gold stocks. So what I'm going to go ahead and do go ahead and show you from here, I went ahead and sorted it by that SCTR. Again, this is primarily where you will want to be paying attention to. The gold miners tend to have the highest leverage as it relates to the price of gold. So that's why we are looking at gold mining stocks. And so let's go ahead and dig in and take a look at one or two of these stocks so that then we can move on to other areas that I mentioned. So AU is certainly one stock, and certainly the stock has already had a significant advance. This is taking us back to the beginning of December, which I had been talking about this back in that period. This stock broke out. But what you want to pay attention to, if you own the stock, you want to make sure the stock retains a presence above this upward trending 10-day simple moving average, and also that this RSI remains positive. We can see that the MACD is poised to have a negative signal crossover, but it's still above this net neutral zero. So you're still in positive territory, but certainly a lot of the bloom may be off of the rose, certainly with this stock. So let's go ahead and go back and take a look at some other stocks that may very well be a bit earlier in their advance. So what I'm going to go ahead and do from here is take you through some of these other gold stocks that will benefit from this potential advance, given the January seasonality with this. This is GFI, Goldfields. This is another one that also has had a nice move during this December period, but we are still very much in an uptrend. This shorter term 10-day is trending upward. Your MACD is trending in an upward fashion. So you could still have more possible upside, certainly with this particular stock. We can go ahead and take a look at one other name, and then I did want to move on to other areas, certainly within these markets, because there's quite a bit going on, and we want to take a look at some of these growth stocks. So let's go ahead and take a look at RG LD. And this is another stock that has had a significant advance, but we can see we've had this, what's called a positive crossover, a golden cross, when your shorter term simple moving averages cross over longer term. So we had the 10-day up through the 50. Now it's up through that 200-day simple moving average. We can see that this stock is in a back and fill base building period. It could potentially advance higher from here. So that's just a few of those names within the defensive gold space that you could potentially look at. Let's go ahead and take a look at some of those stocks. I talked about keying in on former leadership names as a way to play this uptrend in the current market. So what you will want to do is, at the very least, be familiar with those stocks that were viewed as leadership names. And there is a potential way to do that using StockCharts.com. Let's go ahead. Consumer discretionary. For those of you that are not familiar with the action really drilling down into last year, you may not be familiar. This was a very strong group, certainly during the February to May, June period in the broader markets. A lot of strong names in here. So I'm clicking into consumer discretionary, and then actually, interestingly enough, specialty retailers had a very good year last year. So what we can do from here is go ahead and click on that scooter. And what this is going to do is, again, provide you with those stronger names within the consumer discretionary area. And it will pick up some of these stocks that were, in fact, really quite strong last year. And we can go ahead and dig in quite simply. Let's take a look. This is a stock that's been on my MEM Edge list with my advisory service. We can go ahead and click in to take a look at Five Below. And what I want to point out to you here is that significant strength. This is taking us back to 2018. These gaps up here are on very significant earnings. So it was with very sound reasons that Five Below was a big winner last year. It, of course, fell out of bed with other retailers beginning in September, and then the broader market pressures. So more recently, with this confirmed uptrend, with the financials very firmly still in place, the stock is reversing this downtrend. So we can see that the stock is gapping up today. It's actually up 6%, but we want to key in on this RSI trending upward, as well as this MACD, not only having this positive crossover, but trending up above that net neutral zero. The big news here is Five Below has crossed up above this 50-day simple moving average, which is possibly an area of resistance. It's broken above that. Super good news. The stock is now free to advance higher. Let's go ahead and take a look at some other big, certainly higher scooter rating names that you could potentially utilize or enter as a way to play the current uptrend in the broader markets. This particular stock is ORLY, not quite as lively. So I'm going to save us some time here because we're running out, and show you one other big winning stock in that consumer discretionary space, and point out to you this one is a little bit earlier in its advance. It has a way to go. The RSI not quite positive, MACD just poised to have that crossover, and we still have work to do as far as coming up above these simple moving averages. So in the meantime, we could see a rally up to that 200-day, which is 51. I will go ahead and leave it at that. And for those of you that are going to be trading in the markets this week, best of luck. And until next week, take care.
you.